Gold futures rose for several trading days in a row, then fell back after the minutes of the FOMC meeting. Gold futures climbed Wednesday, with prices up a second session in a row, finding support from a flight to safety as cases of the Omicron variant grow and benchmark U.S. stock indexes and the dollar weakened. In electronic trading, however, prices pulled back from the settlement following the release of the Federal Open Market Committee minutes from the December meeting, which came about a half hour after gold futures prices settled Wednesday. The minutes showed that officials generally thought rate hikes could come sooner, at a faster pace than they previously expected. The Fed minutes were hawkish, showing greater concerns that inflation would be persistent and generally indicating an accelerated schedule for rate hikes. Brian London, editor of Gold Newsletter, told MarketWatch. Thus, they were bearish for gold, as confirmed by the immediate market reaction in the gold price. February gold GCG22, GC00, rose $10.50, or 0.6%, to settle at $1,825.10 an ounce. Following a 0.8% rise on Tuesday, prices had fallen at the start of the week to their lowest level since December 21, FactSet data show. Investors seem to be gravitating towards gold as rising Omicron variant cases accelerate the flight to safety, said Lukman Otunyaga, manager, market analysis, at FXTM. In electronic trading not long after the Fed minutes release, February gold edged down from the settlement to trade at $1,816.40. London said, however, that any indication that the first rate hike will come sooner is actually bullish for gold, as gold often rallies on Fed rate increases. The Fed's initial rate hike in December 2015 ended gold's long bear market, and the metal posted a strong rally for months afterward, he said. Otunyaga pointed out that how gold concludes the first trading week of 2022 will be influenced by not only the FOMC meeting minutes, but key U.S. jobs data on Friday. If investors interpret these reports as reinforcing expectations over the Fed raising interest rates 3 times this year, this could send zero-yielding gold lower. The official U.S. jobs report is due Friday, with economists looking for the economy to have added a total 422,000 jobs. Meanwhile, metals markets didn't show much of a reaction after ADP reported Wednesday that private sector payrolls rose by 807,000 in December, more than double the 375,000 expected by economists. All of the current economic news is being viewed through the lens of investors speculating on how fast the Fed could start raising interest rates after its asset purchase program ends in March, said Colin Cieszynski, chief market strategist at SAA Wealth Management, in a market update. In Wednesday dealings, a gauge of the buck, the ICE US dollar index DXY, minus 0.13%, was down 0.4%, boosting the appeal of dollar-denominated gold prices. But the 10-year Treasury note TMUB+10Y, 1.707% edged up to around 1.679%. U.S. benchmark stock indexes traded mostly lower, with the Nasdaq Composite Index Comp minus 2.46% down more than 1%. On COMEX, March silver CH22, minus 0.76%, SI00, minus 0.76% added 11 cents, or 0.5%. to settle at $23.17 an ounce Wednesday, a day after tacking on 1.1%. April platinum PLJ22, plus 1.73% added 3.2% to $1,001.90 an ounce, and March palladium, PAH22, plus 1.66% rose 2.3% to $1,902.60 an ounce. But copper bucked the upward trend for metals, with the March contract HGH22, minus 2.13% settling at $4.414 a pound, down 1.4%.